Most people think trading is a battle against the market. Charts, indicators, strategies, news. But if you've been trading long enough, you discover something uncomfortable. The real battle isn't out there. It's in here. Inside your reactions. Inside your expectations. Inside the silent conversations you have with yourself when money is on the line. Because the market doesn't know you exist, yet somehow it still finds your weaknesses. Or at least that's how it feels. The invisible moment. There is a moment in trading that almost no one sees. It happens right after price moves sharply against you. Your chest tightens, your focus narrows, your body prepares to act, not to think, to act. This reaction is ancient. It's biology, not personality. Your nervous system was built for survival in the wild, not for managing risk on a chart. When uncertainty appears, your brain treats it like danger, and in that state, patience feels unnatural. Waiting feels risky. Doing something feels safe, even if that something destroys your trade. The chemical wave. Every emotional surge in trading has a physical side, a spike of stress hormones, a rush of adrenaline, a quickened heartbeat. But here's the part most traders never learn. These chemical waves are temporary. They rise, they peak, they fall. If you don't fuel them with fearful thoughts, they pass surprisingly fast. But traders rarely let them pass. Instead, the mind starts narrating. This always happens to me. I can't let this be another loss. I need to fix this now. And that narration keeps the emotional wave alive.
Not the market, your interpretation. The illusion of control. Many traders secretly believe the market is targeting them, as if price movements are personal. But the market isn't personal. It's impersonal chaos. Two traders can face the exact same setup. One stays calm, one spirals. If the situation is identical, the difference cannot be the chart. The difference is meaning, what the movement represents to each person. To one trader, it's probability. To another, it's validation or failure. And when money becomes tied to identity, every tick feels emotional. The hidden drivers. Surface emotions in trading are rarely the true cause. Frustration, anger, impatience. These are often protective layers. Underneath them, you might find fear of being wrong, fear of looking foolish, fear of wasting time, fear of not progressing fast enough. Trading has a way of revealing insecurities you didn't know were there, because every result gives feedback, and the ego doesn't always enjoy feedback. The mirror effect. A chart doesn't create emotion. It reflects what's already inside. If you're overly self-critical, losses feel heavier. If you crave validation, wins feel intoxicating. If you fear scarcity, you chase trades. The market simply exposes tendencies, like a mirror that shows both strengths and cracks. And many traders try to fix the reflection instead of the source. They switch strategies, change time frames, add indicators, when the real adjustment is internal. The gap that changes everything. Between what happens in the market and what you do next, there is a tiny gap. It may feel non-existent, but it's there. A fraction of a second where choice lives. Novice traders don't notice it. Experienced traders learn to expand it. That gap is where discipline is born. Not in forcing yourself, not in suppressing emotion, but in pausing long enough to see clearly. A simple question can widen that gap. What action would future me respect? That question slows the impulse, and sometimes slowing down is enough to avoid a mistake. The watcher within. There is a part of you that reacts, and a part of you that observes. Most traders operate from the reactive part. It wants relief, it wants certainty, it wants control. The observing part is quieter. It notices tension, it notices urges, it doesn't rush. When you mentally step into the observer role, something shifts. Instead of saying, "I'm panicking," you notice panic is showing up. That small language change creates distance, and in that distance, clarity grows. You're no longer inside the storm, you're watching the weather. Emotional endurance. Successful trading isn't about eliminating emotion. It's about building tolerance for discomfort. Losses will happen. Uncertainty will exist. Opportunities will be missed. These are not problems. They are conditions of the game. The trader who survives long term is the one who can remain steady while experiencing them.
Not numb. Steady. Like a pilot flying through turbulence. The turbulence doesn't disappear. The pilot learns to handle it. Pressure as training. Most traders resist pressure, but pressure is a teacher. A losing streak teaches emotional regulation. A missed trade teaches patience. A drawdown teaches risk respect. If every trade worked, you'd never grow. Skill is built in challenge, not comfort, just like muscles grow under resistance. The market provides psychological resistance, and whether you grow or break depends on how you interpret it. Punishment or training? Personal rules. Every trader needs internal rules beyond strategy. Rules for emotional states. For example, not trading when exhausted, not increasing size after losses, not chasing moves already extended. These aren't restrictions, they're guardrails. They protect you from your worst moments, because the greatest risk in trading isn't volatility, it's you on a bad day, the power of stepping back. Sometimes the strongest move is inactivity, walking away after a rough session, skipping a day when focus is low, reducing size during emotional periods. This isn't weakness, it's professionalism. Athletes rest to perform better. Traders should too. Mental capital matters as much as financial capital, and once mental capital is drained, even good setups get mishandled. Knowing your patterns. Every trader has emotional patterns. Some overtrade after wins, some hesitate after losses, some seek revenge on the market. These patterns aren't random, they repeat, and what repeats can be recognized. Start noticing. When do you break rules? After what kind of trades? Under what mood? Awareness turns blind spots into manageable areas. You don't need to be perfect. You need to be aware. The story factor. Every trade comes with a story. This will be the big one. This always fails. I need this to work. Stories shape emotion. Emotion shapes action. Action shapes results. Two traders can take the same loss. One thinks, cost to business. The other thinks, I'm failing. Same outcome.
Different emotional impact. When you notice the story, you loosen its grip. You realize it's a narrative, not reality. Identity separation. One of the biggest breakthroughs in trading comes when you separate results from self-worth. A losing trade doesn't mean you're bad. A winning streak doesn't mean you're brilliant. It just means probability played out. When identity is tied to outcomes, emotions swing wildly. When identity is separate, stability appears. And stability is where consistency lives. The long game. Trading is not a sprint. It's not even a marathon. It's a career-length psychological journey. Your goal isn't to win every day. Your goal is to become the type of person who can execute well for years. Calm under pressure, measured under certainty, grounded after wins. That transformation takes time, but every trade is practice, not just for strategy, for mindset. There will always be volatile days. There will always be emotional triggers. But with awareness, pause, and perspective, you gain choice. And choice is freedom. Freedom from impulse. freedom from fear-based reactions, freedom from the need to prove something. The market doesn't need you to be perfect. It needs you to be consistent. And consistency grows from self-awareness, not from chasing control, but from understanding yourself. Because in the end, the most important chart you'll ever read is your own mind. If this message helped you see trading differently, then you're already ahead of where you were yesterday. Share this with a trader who needs it. Subscribe if you want more content that strengthens your mind, not just your strategy. Because better psychology builds better traders. I'll see you in the next one.